So it's literally hurting everybody who goes to work to get a paycheck to feed their families. This is the situation that we're in. Now, secondly, we have to discuss how oil prices is affecting the US dollar. Okay, because traditionally there's a correlation between oil prices and the Canadian dollar. Okay, but now we have a non-traditional sense of oil prices affecting the US dollar, which in turn means this: as long as oil prices continue to go up, right, consumers in the US is going to have less available money to buy goods. Less available money to buy goods means that the economy starts to shrink. If the economy starts to shrink, that means that there's a devaluation, a weakening of the US dollar. Okay. So, being that, in let's say normal economic times, the price of oil does not affect the US dollar so much. But being that we're living in a very, uh, we can say, we can frankly say very scary type times when it comes to the economics, that as long as oil prices continue to go up, we will see a weakening of the US dollar. Okay. And the inverse of that is that if we start to see oil prices decrease, then consumers will have more money to spend because they're not spending money at the pump, which means that they can buy more goods. It will cause the American economy to grow and also cause the US dollar to gain strength. Okay. Now, one thing that you guys also have to also pay attention to is this: increase in gas prices and oil prices, right, is always a precursor sign of a recession coming. Okay. Because as we can see here, let's go back to, I want to go back to this. In 2000, in 2008, gas prices reached an all-time high, and then we seen a drastic drop. This is because the recession of 2008 hit, okay? And this was due to the housing bonds and being bad bonds, and loans are being sold and given to people, and all type of mess was going on with that, okay? Now we're in the same situation too, where gas prices and oil prices are at an all-time high, okay? Usually once we start to see things like that, if this is not controlled in a very, very, if this is not controlled very effectively, this will lead to a recession in the United States, which will lead to a global recession around the world. Okay, so now we're in a situation where we're playing with fire. Is that if we do not get these economics under control between oil and inflation, we will be in a global recession. And it is crazy how a conflict between Russia and Ukraine can now lead to countries that ain't got nothing involved with it to be in a global recession because of how tied and entangled all our economics are. Okay, so this is what's happening with oil. Okay, I know that was a lot, but I'm trying to give you guys the best information so you can understand how to trade oil moving forward and what is going to be dictating the prices of oil. Okay, because you have some people predicting that oil may get as high as $150 a barrel, which is just outrageous. It is so out. It is like stratosphere outrageous. Okay. Now, with all that said, my apologies that took a long time, but like I said, I want to make sure everyone has the correct information to understand how to trade this. Okay, let us break down the technical analysis of what is happening with oil. Okay, we are in a very unique situation with oil. Okay, where this can be our low and this can be our low high, and prices can start to drop. Okay, price can drop as low as here or drop as low as here before we start to see some turn up to the long position again. Okay, now what will cause the oil prices to drop is if America continues to find ways to fix and increase the circulation of oil supply around the world, or if America decides to give the stimulus money, because I heard the American government is considering giving American citizens stimulus checks once again to have extra money at the pump. So this can also bring price down as well. Okay, but it won't bring price down as much as it is as increasing the oil, as it is with increasing the oil supply. Okay. And now we have several European countries that's part of the EU that is also seeing the drastic effect of the lack of oil supply on the prices for their citizens. And they're talking about, forgetting what America's saying, forget what NATO is saying, forget what the EU is saying. We're about to go get this Russian oil because we need to do what we need to do to be able to make sure that our citizens can be able to um, have money in their pocket and not spending all their money on oil. Okay, so within that situation, we will have an increase in supply in oil available around the world as well. So that means price will continue to drop. But if the sanctions on Russian oil continue, then we will see a rise in the prices of oil, which would mean that this is what we will call a high high, and this is what we would call a high low. Okay, and if that would be said, we will continue to go up as high as here, or possibly higher as here, or at least to probably about 135, about probably like about $130 a barrel to price area here before we start to see price going back towards the short position. Okay, so what's going to really dictate what's going on with oil is its supply. If we have increased supply of oil around the world, then we're going to see a drop in oil prices, and you will start to see a drop in the prices of gas at your local gas stations. Okay, but if the Russian sanctions, if the sanctions put in place against Russia continues on its oil, on Russia's natural gases, then we will see a continued increase in price of oil to unprecedented price highs, in which we'll start to have more inflation, and it will lead to a global recession, and we can get as high as here or even 130 before price starts to come down. But if we start to see the other side of that, that we do see the increase in the oil supply around the world, and it brings down the prices of oil, we will see price either drop to here or here before we get into the long position. Okay, so this is what's going on with oil. So you're gonna have to pay attention to what is happening with the Russian oil sanctions. If these sanctions are staying in place, then we're going to be going towards the long position. Okay, and if these sanctions don't stay in place, we'll be going towards the short position. Okay, if the NATO and America starts to find other ways to increase the oil supply, and we will go towards the short position. If NATO and America cannot find ways to increase the oil supply, then we will continue to go towards the long position. Okay, which will also have effect on our U.S. dollar as well. Okay. Hope this information was helpful for you guys. I know this video is a little longer than what we traditionally do, but here at Black Forex, we like to make sure that all you guys that are traders have all the information that you need to make yourself the most productive trader as possible. Okay. We have an email address listed at the bottom of each of our videos that we post. So if you guys are interested in what we're doing and you want to reach out to us, please do not hesitate to email us. We would love to hear back from feedback from everyone. And if you want more information to get clarified, um, email us your ideas and we'll definitely make the content for you, okay? Because we make this information for everyday traders so they can have the best information possible to become the most profitable traders that they can be, okay? Hope this information was helpful for you guys. Happy trading.